Hey guys, welcome back. In today's video, we are talking about why AMC is breaking shorts, the margin calls starting, how brokers are looking for shares, and many more in this video. Firstly, we have to remember, on Friday, what we saw was the market seeing $1.6 trillion being wiped out. Now, AMC was one of the few stocks to have actually stayed green and went up. So AMC ended the day at 0.68%. Bear in mind, it was actually at one point throughout the day up 2%. So why is this AMC breaking the shorts? Well, firstly, we have to look at it as the fact that when we're seeing the whole market falling and AMC is already still going up, we should already understand just how good that is. But secondly, it's about seeing how when the stocks are falling, when the shorts are panicking about all of their other positions, they still have to worry about AMC and still have to suppress AMC. And so this is why we've said, if we ever see a massive market crash, that's when we expect AMC to obviously take off. But another thing that's important about this in terms of seeing AMC take off is about understanding we have to remember that there are so much shares still unsettled, there are still so much money that's unsettled and in short positions for AMC that if they see every stock in the market fall apart from AMC, they will be in a very bad situation. This is a screenshot we've shown multiple times on this channel now. But the reason why I wanted to bring it up again is because firstly, we are familiar with the shares that are unsettled in the DTCC. Then we are aware of the notional value of all shares unsettled at 9.6 billion. The most important thing from here was the average combined price, which is around $8.72 for AMC, meaning that of all of these shares, their average price is at $8.72 all the way up here. Now, the reason why this is important is because when we do see, and we have to remember, a $1.6 trillion wipe is big, of course, but when you consider still how much money is left, there is still obviously a long way to go. But what we are seeing is that if we ever see the market to truly drop, if we ever see a market crash to happen, then that means that these shorts will see all of their collaterals fading away. They will see AMC go up, especially in a time like that, because the reason why I've talked about this is because we've seen in the past, people have talked about how the movie industry is a recession-proof industry. This is why it's been encouraging people to obviously buy AMC stock and buy stocks within the industry recently, because they realize that everything is too far overvalued, it's overpriced, and we could potentially see a crash at any time. But not only that, because AMC is majority owned by retail, they will also know that when it's a stock that's already a recession-proof stock, it's met with a bunch of investors who wouldn't sell it even when a recession happens. That truly makes it the safe haven. And so, if anything, the biggest time, the time we're going to see AMC jump up the fastest will be during a market crash. And so when that happens, when all of the collaterals come falling down and AMC is going all the way up above 872, that's when you'll see every short seller that's involved start to panic. And remember, this is only a portion of the shares and it's already worth 9.6 billion. We've known from the FTDs, we've known from the swaps, the synthetics, the tokenizations, so many more that the situation is obviously way bigger. And so just a portion of it is already 555 million shares, should show you exactly how bad this situation is. And more on this is talking about how, once again, you can correlate it to the recent news with AMC in terms of the authorization of 550 million more shares. Like we said, even if these shares were to be issued and given out to shorts, they are only covering one part and they're only covering one portion of the hole that they've dug for themselves. This is only the shares that are unsettled in DTCC. It's not even talking about everything else out there that exists. And so this is why we've said, I'm not worried about the authorization, especially the fact it's only an authorization and not an issuance of shares. And even if it were to issue out, I'm still not worried that the shorts will be able to get out of the traps. Another big thing is margin calls started whispering Friday. Yen carry cracks, BTC pukes, gold flexes, silver flirts with 50. It's not chaos, it's collaterals rearranging itself. Now, we've talked about this and we've already looked at this, right? We talked about how the market saw 1.6 trillion being wiped out. Now, like I said, and I'm not going back on my words, this is only the beginning. This isn't something that's major, because when you compare to how much the market has already grown in the past, half a year, this is still nothing in comparison, but it's seeing how we're seeing indications, we're seeing hints of what's about to happen. And you have to realize is that at GME warrants sitting on the same margin desk, along with many of the others, you're looking at the feedback loop. Carry unwind, collateral crunch, force hedges, and then the squeeze ignition. And we're already seeing this happening. We've talked about the yen carry trade. We've seen how institutions have been affected. We're seeing why firms like Citadel are worried, especially because of how much exposure they have. And so we've said with this is that a lot of the things that are happening in the market right now that would cause a market crash are all tied up with firms who are also caught up in AMC short. And so what you'll be seeing is that it both ways work. Either it will be AMC squeezes, it will bankrupt these firms, and then a massive market crash will happen. Or it could go the other way. A market crash happens, these firms will see margin calls, and then the squeeze happens. And so you can see how it's a win-win situation for us in both cases, and that's why we're seeing these firms panic, and that's why we are seeing more and more capital accumulating AMC, accumulating GME, because they realize not only how safe AMC is, but also how dangerous AMC could be towards these short sellers, and that's why they are worried. You can see now people's GME warrants are getting liquidated by brokers without consent. People's warrants are getting delayed still. Somewhere just straight told you you won't get warrants. Here's the cash equivalent. Brokers and market makers can always bend the rule to give exemptions. Meanwhile, the SEC is more worthless. And so this is what we are looking at. Now, once again, we've known how regulations haven't been here to help us. Regulation have always turned a blind eye, and they've always let these institutions get away with the majority of things, especially when it's things to do with retail. However, it doesn't take away from the fact that we are still causing problems. Yes, regulations aren't doing anything, but the very fact we are seeing brokers force liquidating warrants, the fact that we are seeing warrants being still delayed, the fact we even seen that they're giving out cash equivalent should already show you all the problems we've mentioned in the past, should already show you just how much panic and stress is being caused right now. You have to understand, if they're getting liquidated by brokers without consent, it shows that we are applying stress to their margin and they need to clear up for the books. If we're seeing how warrants are being delayed, it's because of the existence of synthetic shares and they can't actually give out because they've sold you synthetic shares, so they can't match it with an actual warrant, so they're delaying it. And then if they're giving you the cash warrant, the cash equivalent, once again, it's still the same. It's because they can't actually match your shares with a warrant because it's synthetic shares. Now, just because you own synthetic shares, it doesn't mean it's the end for you, but it does mean it's the end for the brokers. And that's why they're panicking right now, and that's why they are stressing. You can even see another example. Banks and brokers are still looking for GME warrants where we can see messages. And if you are, of course, one of these guys in terms of you haven't seen it or it's been forced liquidated or you've got cash equivalents, feel free to comment down below. Let everyone know exactly what's going on. Feel free to be vocal about it. Contact your brokers if you have to. But this is what we are seeing right now. And like I've said, if we're seeing these problems happen, if we were promised a warrant, but we didn't get it, and we've known the situation with the fact that if there were synthetics being issued and they couldn't match a warrant because it's synthetics, then that should show you what's happening. And so that's why we've said that these guys are not in a good position. And what's more interesting about this is prior to the warrants being issued, we saw how OCC just quietly dropped a nuke in memo form with the GameStop warrants, and they were both removed from auto exercise. It means the system can't guarantee what's deliverable anymore. When OCC say security not trading, it's not a glitch, it's a legal freeze on automatic settlement. Now the thing that's interesting about this is this was prior to the warrants being issued, and they were already releasing forms like this. It should really show you just how worried they were about the whole warrant situation, and is why they had to beforehand give these things out, because they were already aware of the fact that because of the existence of synthetics, because the existence of billions of synthetics for GME, many brokers and banks weren't able to match it with the warrants, and they tried to get them a way out. As always, then, this is financial advice, so do take our as a result. Make sure to do your own due diligence and research, and I'll catch you guys next time.